the other big headline from the market has been all the block trade activity and the block action. So that's exactly what we're going to focus on. We've seen deals worth almost 21,000 crores in the last 2 weeks alone. And of course, the number is much, much bigger if you start compiling from the start of the year. So to decode the environment, the drivers, the pricing and all of that, we have with us two experts, Amitabh Malhotra, Vice Chairman Investment Banking at HSBC India, and Bhavesh Shah, Managing Director and Head of Investment Banking at Aquarius. Gentlemen, thank you very much for joining in. Amitabh and Bhavesh, good to have you on. I'm sure you folks have been very, very busy for the better part of the last 12 months because Deal Street has perhaps never been thriving as much, right? So let's get your opening thoughts in, Amitabh. The naysayers will always raise the question, is there too much supply coming? Does it indicate that valuations are near a top? But you tell us, which side of the argument are you on?
Look, I think the market is seeing and will continue to see a good amount of activity and support for issuances. There are a bunch of factors that have contributed towards these large set of issuance. As you said, there have been a lot of large blocks that have also happened. There have been recent scale down in geopolitical tension and easing of trade uncertainties. And there are other macro factors like strong GDP growth and recent rate cut that we saw. There have also been significant positive trends in the full year results by corporate India that has further aided the market backdrop. You've seen FIIs increase interest in the Indian market, particularly since April 2025. They were net sellers before that, but you've seen them become net positive buyers. Retail inflows and domestic mutual fund have supported this resurgence. So all of this have led to a reduced market volatility. It has reinforced investor confidence and enabled recovery in deal activity. So I'll summarize that recent IPOs at optimum valuation, strong moats, robust financial and well-funded growth plans offer really a long-term value creation that has received strong interest from local and international investor, and we think it will continue to be like that.
Amitabh, just a question, maybe an unfair one, but I'm asking you from the top of your head. The exits have included both Indian promoters paring their stake and maybe raising money to invest elsewhere. But the exits have also included a lot of private equity finally moving out. And that's the nature of private equity, perhaps nothing wrong with that. But can you give us some numbers and some quantum, say in 2025 or maybe the last 12 months, whatever data you've looked at recently, what's been the total value of deals? And roughly speaking, how much would be foreign exits? And then the question, is that a concern?
Look, it's difficult to give you data at hand, but I'll give you some kind of indicators to that. You're right in saying that there have been a mix of both offer for sale and primary fundraise. And at the point being, the market has shown some really good appetite for secondary absorption with the likes of, for example, Hexaware Technologies. It was 100% OFS over $1 billion. And now we are seeing NSDL on the road with 100% OFS. So market is now accepting these stories. This indicates that the market investors have become more mature and resilient in accepting OFS as part of an IPO, as long as the company's fundamentals are strong and pricing is reasonable. And some of these examples that I gave are pretty much an proxy for that. Look, although fresh funding will still play a strong role in growth sectors like renewable, tech and fintech, we believe there will be a slight tilt towards OFS-led IPOs in 2026, particularly because the nature of these situations are where, like you said, private equity, some money to be taken by the promoter of the block to fund their other acquisition. You talked earlier about JSW Paints, obviously looking at acquiring AkzoNobel, so they've also funded that through that route. So we'll see that happening a lot more.
Okay. All right. Interesting thoughts there. Let me come to Bhavesh as well. Bhavesh, similar sort of questions to you. Your thoughts on the deal buzz that we've seen. And again, the fact that there are so many OFSs. I'm saying it's a sign of maturity of the market. Your thoughts? Is it a concern? Is it not indicative of maybe valuations?
Surabhi, thanks for having me on this on the show. What I can say is what we are witnessing right now is a completely game-changing scenario in the capital markets. It's a very, very positive sign that we're seeing in terms of both the absorption of the stock which is coming into the market, and B, the willingness of the of the sellers or the ability for them to sell in the market as well. If you really look at the statistics on the demand side, it's 26,000 crores worth of systematic investment plan, mutual fund equity coming into the markets every month. And that's almost like a $3 billion. And the mutual fund investors, they are always looking for great companies to invest in. We have seen data where companies where mutual funds have invested, the same mutual funds want to invest more and more in them. For every IPO, that happens, there's a huge amount of work that happens by the mutual fund investors and other investors before they raise their hand to kind of invest in the IPO. But the allocations that they get in the IPO is far too little for the amount of work they do and the amount of resources that they have to invest. So it is this block deals which really help them scale up their investments into each of these companies. And we have seen that for every opportunity for them, they just kind of add, as long as the company is doing very well, as long as company has kept its promises of doing what they have done. I call that as a say-do ratio. If the company is doing what they say, they're maintaining a good say-do ratio. And if the say-do ratio for the company is good, the mutual fund investors are putting more and more money. And in fact, block deals are in fact a very good way for investing for the mutual fund, especially.
True.
Without creating any distortion in the prices. They can buy in bulk. They in fact can get a better deal or negotiated prices.
No, absolutely. And Bhavish, we hear that because when we quiz the mutual fund heads and the mutual fund CIOs, they say exactly that sometimes, you just don't have adequate stock in the market. So at least when there are good blocks, it allows us to participate. By the way, I think this consensus here within us in the studios, we love the concept of the say-do ratio. I think it should become a standard feature in all financial reporting. What is
not just financial reporting? I think everything ever, what you say versus what you do. What a wonderful ratio that is.
What about Mr. Donald Trump's say-do ratio then?
His will be the lowest.
That's a tangent.
Or rather the highest, depending on 2 weeks. Yeah, so his say is a lot more and do is, we don't know.
Shouldn't go there. Okay. I'm bringing the discussion back to investment banking. But Bhavish, you also raised an important point, right? That mutual funds have been, the whole fraternity has been such a strong support, right? They've been buying a lot of the paper that's on offer. But again, I'm playing devil's advocate here. The fact that mutual funds are not getting the kind of flows that they were getting at the peak of the market, and maybe that turns because the market's turning, sentiment is a big thing. But the last 4-5 months so far this year, flows have been coming down, systematically coming down month after month. Could that be a risk? Who will absorb all this supply? And is oversupply a risk for the market? This is something, and I'm not saying this, this is something that CLSA's Vikash Jain told us just earlier this week, that from an overall listed market perspective, the sheer supply of paper could become a concern. Let's take quick thoughts from both of you. Bhavish?
So I personally feel that, we used to have in investment banking something known as a overhang of stock in the market. And we would advise the stakeholders before they went public to see how they can make this as diverse as possible, their shareholding, and as long-term as possible so the incoming investors don't see this as a stock overhang and which can have a potential stock pressure. We are now seeing a complete reversal of that situation, in fact. And again, I go back to the same, if the company is performing well, in fact, the investors want to invest more and more in the same company. So in fact, the stock overhang is now becoming an opportunity for many of the investors to see that I just don't need to hold a small stake in the company. I can eventually hold a larger stake with the kind of money I'm getting through the systematic investment route. I can deploy more and more in the same company. So in fact, the stock overhang, as long as the company is doing what they promised to do, I don't think stock overhang is an issue at all.
Okay, very quickly, Amitabh, your thoughts? Is oversupply a risk?
It's a multi-billion-dollar question, but seeing it from our lens, I think with many companies getting ready and already lining up for public filings on the back of a fairly robust second half 2025, we believe the momentum will continue in looking forward on 2026 as well. And then you talked about both FIIs and in terms of mutual funds. The AUM for domestic asset managers is growing on a monthly basis. And we think they command now a significant space and weightage in participating in many of these issuances. So the point being that with FIIs becoming net buyers and DFIs continuing to kind of increase in their AUM, we think there's going to be significant activity also in the secondary market. And but and there's always a but. This outlook remains subject to overall market condition, regulatory developments, and evolving geopolitical landscapes, because that could influence timing and investor sentiments and create short windows of opportunities. So I will say optimism with a bit of caution.
All right, gentlemen, appreciate you joining in and filling us in with your take. We look forward to revisit this particular point in the couple of weeks or so. Thanks a lot for joining in.